So you hear it everywhere on the news from your friends, from your family, from your coworkers. It's almost impossible to buy a home today because homes are so expensive. Everyone's priced out, right? Maybe, but not quite. So let's take a look at it. The average home price, the median home price in the United States right now is $419,200. That's median. Now, it may be different exactly in your town or whatever, but the median in the US is $419,200. So, how do you afford a home at $419,200? Well, easier than you think perhaps, because what you need to buy a home are two things: down payment and closing costs, right? You don't need the almost $20,000 in your bank account. You just need the down payment. So what does that down payment and closing costs look like? Well, let's take a look at it. If you're eligible for a VA loan, obviously you may already know this, 0% down. You don't need a down payment. Same with USDA, which is also called rural housing. In that case, the house has to be considered rural. Some are, some aren't. So if it's USDA or VA, no down payment needed. But what about if you're not a veteran and it's the property's not rural? Well, then you either go conventional or FHA typically. Now, conventional is usually 3% down. And what is 3% of $419,200? Again, the median home price in the US, $12,576. Let's call it $12,600, right? Just to round up. So you need $12,600 as a down payment. That's 3% of the median home price in the US. Can you come up with $12,600? Oftentimes the answer is yes, and many times it's a gift from family members who want to see you in a house because they know the power of building wealth over time when you own your own home. The most common thing that I see other times is when you simply borrow against a 401k or an IRA, right? You have money in your 401k, you've been putting it in for years. You don't want to take it out because there's penalties and taxes, but you can oftentimes borrow against it. And that's your down payment. What if you go FHA? That's the other option that people have oftentimes. That's 3.5% down. Doesn't sound like much more. It's a little bit more. $14,700. So, on a $419,200 house, your down payment would be $14,700 if you went FHA. Again, can you come up with that? Sure, $14,700, almost $15,000 is a lot of money, but it's not impossible to come up with. And I have people doing it in creative ways. Again, borrow against a 401k, a gift from family, you save, you sell things to get into a house. Right? I've had people sell boats, I've had people sell motorcycles, I've had people sell cars. Believe it or not, I've had people sell heads of cattle that they own. It's amazing how creative you can get, or simply driving Uber for a little bit or doing a side job for 2 or 3 or 4 months to save up for that down payment to get into your house. Now, on top of the closing costs of $14,700 or $12,600, depending on FHA or conventional, you also have closing costs. Closing costs and escrows together will be about $10,000. The good news is, especially right now in this market, a lot of times the sellers are open to paying all or part of those closing costs for you. They can't pay the down payment, but they can pay closing costs. And so you simply negotiate. So if someone's asking $419,200 for their house, instead of offering less, say $410,000, you might give them what they're asking for, but ask for the difference in closing cost contributions, right? So $419,200, instead of offering $410,000, you offer full price, but ask them for $9,200 toward your closing costs. The seller nets $410,000, but you get closing costs paid out of the equity in the home. It's a way to use the equity to get into a home, which I love, actually. There's a lot of naysayers out there. There's naysayers out there for anything you want to accomplish in life. If you tell enough people, some people will tell you it's impossible, you'll never accomplish it, you'll never get there, it's not going to happen. Until you put your mind to it and really break it down into chunks, right? How do you eat an elephant? Well, we know the answer, one bite at a time. How do you buy a home when home prices are averaging $419,200? One step at a time. And that's it. Get pre-approved, save for the down payment, or get a gift, or borrow from your 401k. or there's many other ways you can do that, and maybe ask the sellers to pay closing costs. So that's all you need to get into your home. Now, what's the payment? Because that's the other part. Part of it is getting into the home, then you have to actually pay for the home. Well, with taxes and insurance here in Charleston area, that would be about $3,029 a month for a VA loan. $419,200, zero down payment. What's your monthly payment? Just over $3,000, $3,025. Now, it'd be a little bit more than that on FHA and conventional. It'd be about $3,100 versus $3,040. So in the neighborhood of $3,000 to $3,100, no matter which way you go, is going to be your monthly payment. So can you afford that? Well, that's where the pre-approval comes in. I'll let you know the maximum amount you can qualify for and the maximum monthly payment you qualify for based on your income and debts and things like that. But then we'll back into the more important number. And the more important number is, where's your comfort level? Are you comfortable paying $3,000 a month for your housing? Well, if you are, then that's great. Buy at $419,200. If you're not, guess what? That's the median home price. It means half the homes in the U.S. are priced above that and half are below that. So you can find a home at $350,000, $325,000, whatever it may be, and we'll back into what the monthly payment is, where your comfort level is, and that will determine your price point. So don't let anyone tell you it's impossible to buy a home today. It's not. It's highly possible. Yes, it's a little bit more difficult than it was 5 or 7 years ago, and it's certainly more difficult than it was in 2009-10, just after the great housing crash, when home prices were rock bottom and starting to grow again. But what's better, to buy a home now or wait 10 years? Well, if you wait 10 years, you're going to be paying quite a bit more for the home that you could buy today. It's just a matter of buckling down and getting into it one step at a time. First step, pre-approval. Second step, know how much that down payment you need is going to be. Third step, come up with that. Fourth step, contact a realtor and let them know that, hey, I want to get into a home, but I have to have the seller pay closing costs. Can we do that? A good realtor will tell you, we're going to try, but we'll only see homes and we'll only negotiate with homes where, yes, the sellers are willing to pay closing costs. So I'd love for you to be in your home sometime between spring and summer, if that's your goal. And if it is, let's get to work on it. We know the steps. Let's take step number 1 today, and that's reach out. I'll talk to you soon.